think the market has been thrown between two opposite forces in the last couple of months. On the one hand, we have this very strong liquidity support, which is kind of inflating all the market, and the equity market is one of the key beneficiaries. So this TINA, there is no alternative mindset, is still very dominant in investor minds, and that's pushing them to keep adding to equities and use any kind of dip to add to the equity market. On the other hand, we've seen within the equity market a much more cautious positioning and some degrossing on the crowded or consensus trade of the start of the year, and the reflation trade in particular has been sold. With concern about China, with concern about COVID basically coming back. So even though the equity market is quite resilient and keeps defying gravity, we've seen a much more cautious positioning within the market, which is telling us that maybe the market is not as priced for perfection as it looks. So with the kind of fourth quarter coming soon, we'll see what happens. But I do think a lot of uncertainty about China, about COVID, is priced in, despite the apparent resiliency of the overall market.
Emmanuel, I have to admit that I hadn't seen that acronym before, TINA. There is no alternative until I read your latest research note. Is that new, that investors feel there's no alternative? Because it feels like we've kind of been in this environment for a while now.
Yeah, it's not new. It's been on for some time now, but it's not ending. And again, we had a fairly dovish tapering, news over last week, with the Fed preparing the ground very cautiously to announce taper later this year. So as long as this impression that the Fed is still a support to the market is around, the liquidity support won't go away anytime soon, right? So that's why we are seeing yields still very, very low, despite the improvement in growth we had. And as long as yields are very low, you can put the equity market on a high multiple, and that's give it a bit more, attractiveness compared to bonds, right? So I would say that TINA is not the only support to the market. It's been, I think, the excuse for investors to keep buying dips whenever they occur. But we should not forget that this rally has been built on very strong foundation, and the Q2 reporting season has been a very strong catalyst for, again, investors to buy the dip in July. So ultimately, there's a lot of liquidity to play with, but fundamentals are still supportive of the equity market. And we had a very strong Q2 reporting season, which I think gave a bit more fundamental justification for investors to use this liquidity and buy more equities.